Samir Arora joining us, and we have a whole line of experts who are going to take us through what the markets may look like, because that's what's important as well. Samir, very good morning to you, and we'll pull up the implied on our screen as well. So far, Indian markets have been like a shock absorber, have been digesting all of this mania quite well. Why do you think so?
Well, that is because from an economy or a stock market point of view, the impact is very limited. Even if you see the exports, other than textiles, which you can visibly see that there are some listed companies, and we have happen to have one or two of them. But otherwise, you will not know. Okay, it's very sad that jewelry and exports will be affected, but you don't have listed stocks in those things which are directly exporting to US. Similarly, in many other areas. And in macro terms, it is only the exports are about 2.4% of GDP. So if these exports get cut down by 25% and there is no other action taken, that they don't go to some other market, or that the government of India does not take any action to revive something else or to subsidize something else, then after all that, the effect will be less than 0.3, 0.4%. So I think that way the impact on the market is not there. Plus, we broadly know that we are not believing that this is forever. So, when you cut a stock down 10, 20%, which is like 1/5 of his future in some sense, that can't be if you believe in your mind that this is not going to be there for long. And also, as you yourself was just showing, and I saw it on Twitter a few minutes ago, that there might be tariffs on other countries and secondary tariffs. So it's not over. Plus, you see, it's been postponed by 21 days. It is coming after their visit to India for their team. So it's too early to bother too much. And even in the end, it's not too much to bother about anyway.
Hi, Alex here. So I'm just wondering what you read about this, because this is seemingly the new normal. Tumhara kutta kutta, mera kutta Tommy. And so ultimately, if other people are trading with Russia, it's fine. But then you're using it selectively to whack somebody on the head with. And how, as an investor in India, then do you invest when it's a little arbitrary from that perspective?
No, because it won't matter. I'm telling you, it won't matter. So you can invest and just don't buy blatantly US exposed exporting stock if you don't want. Even we did not average. Our stock was down some 8-10% yesterday, one of them. But that's why you have a portfolio of 40 stocks and one of them goes down, sad luck. The point is that for 99% of the stock market, it won't be affected. But there are other big picture issues for India in terms of new alignments and realignments and all those things, which you can say, okay, they also make a macro difference someday. But literally, directly, it won't be. Of course, you can wait 3 days, 5 days, 1 month. It doesn't matter. It's not good. It's not a runaway market that if you don't buy today, you will miss something great. But it's not something to be bothered about beyond a point. That's what I think right now, because it's uncertain, but this uncertainty is sort of diffuse uncertainty. If it is uncertainty directly related to some stock and big stocks and big weight of the market, then there'll be a different impact on the market. Now, okay, suppose somebody tells me that the GDP will not be 6.5 but 6.2. First of all, I don't know how the original GDP was calculated. I don't relate it directly to my stocks. And even if it is 0.2%, and who knows how that 0.2% can be recovered by either the initiative of the company itself, the exporters, or by the government, or that next week there might be a ceasefire in Russia, or that Trump, the team coming to India might agree that we are not to be blamed for this war, and so many things. And as I said, even if in the end nothing changes, okay, it's worth a little bit here or there, except directly in some stocks.
Samir, morning, and Neeraj here, and therefore just trying to understand, how do you think of the ability to measure risk reward either on the downside or on the upside? And therefore, do you sit on the sidelines as opposed to even buying right now and just wait for the dust to settle?
Just to tell you, it's absolutely true that last night, out of their large-heartedness, one guy who has a separate account with us sent us $5 million. Maybe he is frustrated with Trump. Who knows? He's not an Indian. So anyway, my trader was just now asking me whether we're going to buy today. Should we keep it in dollar and then convert it on the day we want to buy? I said, no, we will buy mostly today. Maybe not in the first 10 minutes, not in the first 1 hour, but mostly we will buy today. So point is, But the other side is that it's not that there is some massive upside that we are thinking because the earnings themselves have been poor. But it is not bad. They are okay. They are 9-10% every day. Everything has to be compared with alternatives, with interest rates, with everything else. And secondly, whether anybody believes or not, because of July, but in a macro sense, there is a diversification away from US literally by the whole world. And that is why from February 1, we still have inflows. Please note that on the day this announcement came, that day only one of our companies, Paytm, placed some 3,800 crores, and today another company is going to place. And mostly these deals are pre-decided. That's why they come out. So mostly these things are happening. The world is not feeling so bad that people are going to stop. You can just change if you want a little bit of what you want to buy or not buy for 10 days. It's not that you'll miss some great things, but generally the belief is that for the next 6-9 months, your returns are moderate, maybe in line with 10% per annum kind returns, because that is the sort of earnings growth plus minus. And then you hope that things change. Also, from this uncertainty point of view, if there's any improvement, either because the war itself, there's a ceasefire, Putin is saying that, Trump is saying, I might meet Putin next week, or Putin asks that US envoy that we should meet, they should meet, or that India does something, or that after coming to India, even there's a small, give back of this tariff and other things. It's too unpredictable on those things, but which are broadly not relevant. But if they happen, we can say, okay, give us 2% extra for that.
Samir, so therefore the follow-up question would be that if indeed this storm does settle with the kind of long shot that the FIs are in, the kind of selling that has happened, does that set the stage for actually an uptick? I heard you say that you don't expect a large upside, but
No, because I am talking purely from the earnings point of view.
got it.
I don't like the idea of saying that large flows will lead to large returns, but large flows can lead to support for the market. Because if there are higher returns than, say, earnings beyond a point, then you will just have lower returns in the next round or the next year. So, broadly, the way to look at it is, because if I say, or I believe, forget about saying, if I believe that my returns will be 20% from here to December, will my behavior change if I thought correctly and truly what I believe, which is that your returns will be annualized 10%, which means 5% returns from here to the end of the year. I will behave mostly the same way. But if I believe that market will fall 10% or 5%, then my behavior will change, my long short will change, my stocks will change. Once I'm feeling positive means what else can I do? That much positive is enough. Then my behavior is the same. And if the market goes up more, I will not give back those by saying I don't want because I never thought. But there is no need to think in that bullish a way, because then it changes your thing for many people who might be changing their asset allocation, this, that, or a little bit punting. We don't do that. We are saying broadly it is in the range where you should be constructive. Now, if it becomes even more constructive, please take it with both hands. But we are not thinking that that is reasonable at this stage.
Samir, hi. You had put out a post, I think, a few days ago when this first round came, that a few extra weekends that if we work out, we can do this up. Right now, there's also a lot of talk about, let's use this opportunity. Some of the best voices are saying, cut your GST, make yourself more efficient. Having said that, is that a bit of bluster on our part, or can we really hold our ground on this? I'm honestly asking.
No, seriously, I agree that we should do something, but we don't seem to be doing so. Therefore, I have stopped expecting it. But some of these things can happen, should happen. By the way, the tax cut that was given in the budget of approximately 1 lakh crore. Oh, I can see a good slide here, but I can see this 1 lakh crore cut that was given has broadly been frittered away in F&O losses for the same crowd, more or less, the middle class. So we have to think about all these things. These are now becoming macroeconomic issues. They are no longer just stock market efficiency issues. By the way, none of these put calls are making our country more efficient. If anybody thinks that, because I did a PhD from Wharton, I don't think these things are helping in capital allocation and efficient markets and all that is just pure 100% speculation. And I would say that if somebody wanted to do it, they should actually allow physical casinos, because like in Singapore, when you have a real casino, you will make hotels, rooms, theaters around it, and it becomes a tourist thing rather than just speculating on your screen. But there are many things the government can do, but will they do? We hope they do.
Samir, a quick last question. I was looking at a post that your team had shared about the FlexiCap fund, and ultimately, I think a lot of mutual fund investors are wondering whether to keep the SIP on, and they saw that earlier in the year when the broader markets corrected by 20% and then came back by 20%. Everybody that jumped ship when it fell 20%, then regretted it. So, is that the trick for long-term compounding?
100%, because if you see, if although we don't like our fund to be so volatile like it was in Jan, but it helped the SIP investors. And at the end of the day, now we have beaten the index by more than 10% in 19 months or whatever. So generally, that is the formula. I have personally made so much money just by investing. Although I have literally not done SIP, but broadly it's been equivalent of a SIP. Because the market is good, and we also have to keep looking at alternative, that there is no alternative, in the sense that although today the nominal growth rate of India and of earnings will be say 10% for now, for at least 2-3 quarters. Now people will say that previously our market used to give 14-15% because that was the earnings growth and that was plus minus the GDP growth in nominal terms. But it has to be compared with interest rates. Previously, you were getting 10-year government bond at 9%, so you will make 5%, 4% more than that at an index level, 13-14%. Now that is giving 6 point something, so you are not supposed to make 15. They are all coming from the same backdrop. But the point is, there's nothing better, and I am exhibit A for that if you want to see.
All right. Exhibit A. That's a good way of putting it. Thank you so much, Samir,
Thank you very
for
much.
speaking with us.